I will go ahead and get started. Let me get my screen shared. Okay, can everybody see my screen? Okay. So I will go ahead and get us started. Our topic for today will be utility allowances, and we'll be going over how to calculate those and some frequently asked questions that we get about those. So I will go ahead and get us started. The first thing that I want to do is kind of go over some of the terms that I'll be using. I know that this is probably review for everybody, but I just want to make sure that we are clear on the distinctions between some of these terms, especially since some of them I've used interchangeably in the past. I want to make sure that we are clear on the difference just so the rest of the presentation makes a little bit more sense. But to go ahead and start, a utility allowance schedule, that's something that everybody is probably already familiar with. These are the schedules that are published by IHCDA every year. They are linked on our website. So these go through the utility cost allowances for different sized units in counties throughout the state. They are published every year around mid-December. And when the new ones are published, you want to make sure that you're using the new ones, regardless of the funding year that you're operating in. I know that we have some awards right now that are still in funding year 2020, or sorry, fiscal year 2020. Even though the award is for fiscal year 2020, you would still use the most recent, so the ones from 2021. And then you can see on the website there is both single family and multifamily. So single family would be if a client was renting a home, whereas multifamily would be if the client was renting an apartment unit or in a condo, anything that has multiple structures with multiple families housed in one building. Okay, the next term that we'll go over is utility allowance. So that is what we calculate for each client, and that is based off of the utility allowance schedules. So that would be based on utilities that are not included in the client's rent. And again, it's based on unit size, county, and then the single versus multi-unit structure. And then a utility reimbursement. This would be anything that the client is reimbursed or the program pays to the utility company on behalf of the client. So this would be in instances where the utility allowance for the client is larger than what their rent is determined to be. So what utilities are eligible? Eligible utilities include gas and oil, electricity, water, sewage, and garbage. Ineligible utilities are telephone, internet, and cable. And refrigerator and microwave, those can be eligible utilities if they are provided by the client. So if it's something that the landlord furnishes in the unit, then they would not be eligible. In general, if you have questions about whether or not something is eligible, you can typically look at one of those utility schedules and you can see what is listed and make the determination that way. And then getting into where the utility allowances are actually paid out from. It will vary a little bit based on the program that the client is served by. So for rapid rehousing and permanent supportive housing, the utilities for these clients should be paid out of the rental assistance line item. The CoC final rule considers utilities as part of gross rent, so that's why it comes out of the rental assistance line item. For any clients that are in transitional housing, this is a little bit different and it will depend on where the utilities are. So if the utilities are included in the rent of the unit, then those utilities can be paid from leasing funds. Whereas if they are not provided by the landlord, then those would be an operating cost. And then just as a general note, utility deposits can always be an eligible cost for participants. Those would be under supportive services instead. Okay, and then now we'll move into actually calculating a utility allowance, just to make sure that everybody is clear on how you do that. So for this example, we will say that the family that is being housed It is a 3-person family. It is a mother with 2 small children. They will be moving into a 2-bedroom house that they're renting, and the home is located in Howard County. So the first step that we would do when calculating the utility allowance is to pull up the utility allowance schedule. So again, you would go back to that website that I had linked on the first or second slide of the presentation. And this presentation will be sent out, so you'll have all of the links that I've shown here. The first step is to determine which one of these we would be looking at for the utility allowance determination. So since this family is renting a house, that would be considered a single family unit. So we would look at the single family utility allowances. And we also want to make sure that we're using the most recent one that's posted on the website. From there, we want to make sure that we have Howard County selected, and that, again, it says single family up at the top. And then when you go through, you want to identify the different costs that the client will be responsible for. So for this example, we'll say that the client is responsible for the electricity bill and the gas bill. You would go through, so for heating, you would select natural gas since they have natural gas heating. For cooking, we'll say they have an electric stove, so you would select electric there. Other electric would be other things that are included in the utility bill, like lights, anything that's plugged into outlets. We'll say that they do have air conditioning, so we'll include that as well. And water heating, it has a gas water heater. And then down at the bottom, what I have highlighted in green, these will all be things that the landlord pays for. So in this scenario, the landlord will be responsible for the water bill, which includes sewer and trash collection. We'll say in this instance that stormwater is already wrapped into the sewer fee. And then for this unit, the landlord provides the refrigerator and microwave, so we don't need to include any of those. So everything that is highlighted in yellow is what we will transfer over to the client's utility allowance sheet. So our next step would be to plug all of that into the income and rent calculation worksheet. And we do have that on the IHCDA website. We have that linked, so when you get this PowerPoint presentation, if you don't have an updated version of that form, you can go there and get one. But you want to make sure that you have all of the correct information filled in. So you want to make sure you have the county, the unit type, date, unit size, and then you would go through and fill in each of those costs that we just identified. You want to make sure the total adds up at the bottom. And then from there, your next step would be determining if the client needs a utility reimbursement or not. So when you are trying to determine if the client needs a utility reimbursement, the first step would be to make sure that you have all of the information filled out on the income and rent calculation worksheet. In this example that I have added, we have it determined that the tenant's rent contribution will be $153. We'll say that their rent each month is $500. And if all of the utilities were to be included in the lease, this is where we would stop. So the client would be responsible for $153, which would be contributed to rent. And then the program would be responsible for paying $347 to the landlord. And those two numbers together would add up to $500. So that would be the total amount of rent. And then if all utilities were included, that would be where we stop. If utilities are not included, then you would go ahead and move on to section 5. So for this, you want to make sure that the utility allowance that we calculated earlier is transferring to this tab. And then you should also see that the tenant rent that was calculated on the last slide transfers over too. So in this example, again, the client would still be responsible for paying $153 total towards their housing costs. Their utility allowance is determined to be $165. So their estimated utility costs for each month are greater than what they should be paying each month to their housing costs. So because of that, we end up with a $12 difference between what the client is expected to pay and what they are estimated they will have to pay for utilities each month. It says on the sheet as well, if this is a negative number, this is the amount to be reimbursed to the tenant. So we have a negative 12 here, so $12 would go to either the tenant or it could be paid directly to the utility company. In total, since the client is paying all of their $153 contribution to the utility companies, they would not have to contribute anything towards rent. In total, the program would end up paying $512, which is the full $500 payment to the landlord, and then an additional $12 either to the utility company or to the client to reimburse them for that payment. And then really quickly, we'll go through another example. So we'll say in this one, the client has increased their income. So now their expected rent would be $453 a month. Their utility allowance will stay the same since there haven't been any changes to that. So this time when we are looking at it, since the client's monthly housing cost that they are expected to pay is $453 and the utility allowance is $165, since their contribution is larger than the utility allowance, they are expected to pay the utility allowance first, and then with the remaining money, they will contribute that towards the rent. So the $453, which is their calculated contribution, you subtract their utility allowance since they are expected to pay utilities first, and then they would pay that remaining $288 to the landlord. In this example, the client does not receive a utility reimbursement because they have enough money to cover that allocated utility expense, and the program would pay $212 to the landlord, which would bring up the client's $288 contribution to the full $500 rent. And then really quickly, since things can be a little bit different with transitional housing, I will go over that as well. Transitional housing programs are not required to charge occupancy fees, but when you are calculating if the client should receive a utility reimbursement, you should consider what the full occupancy fee would be if it were imposed. So in these examples, we would calculate the maximum occupancy charge that the client could be charged, and then we will go through and calculate the utility allowance. And then we would do the same thing where we do the client's maximum contribution, subtract the utility allowance from that, and then if we have anything that shows up as a negative number, that would be what is reimbursed to the client or sent to the utility company. So in the first example, the client would be expected to pay $35 a month if there were an occupancy charge. Their utility allowance is determined to be $20. Since there is $15 left over that they would have if they were paying that, then there is not a reimbursement that needs to be paid to the client. In the second example, if the client were expected to pay the full occupancy charge, they would be paying $55. Their determined utility allowance is $60, which is greater than what they would be expected to pay as their housing cost. So because of that, the client would be entitled to a $5 utility reimbursement paid either to them or to the utility company on their behalf. And then when you are paying out those utility reimbursements, HUD has allowed for two different options for doing that. The first option is to pay the program participant directly, and the second option is what IHCDA strongly recommends that you follow. That would be the option to pay the utility company on behalf of the program participant. In order to do this, there are a few extra things that you have to make sure that you document. So with this, you would need to make sure that you have documented permission from the client to pay the utility company on their behalf. And you would also need to provide the client with a written notification of any outstanding balances and the amount paid to the utility company each month. So this is to allow the client to be able to pay any outstanding amounts if the utility allowance does not already cover that. The documentation requirements for utility allowances. So these are all of the things that would need to be maintained in the client's file. You would need the income and rent calculation worksheet, as well as any supporting evidence that is used to generate those calculations. You would need a copy of the utility schedule. And then if you are paying the program, or if you are paying the utility company directly, you would need written permission from the client to pay the utility company. And you would also need to maintain copies of those notices that you have to distribute to the client each month. And then you would also have to have receipts for any payments to the landlord and utility companies for rent and utility expenses. And then before we open it up to questions, I do want to go through a few questions that we have received about utility allowances. So the first one is from people that have figured out that they've been doing utility allowance calculations or utility reimbursements incorrectly. If that is the case, the first thing that I would recommend is going through some client files and reviewing the income and rent calculation worksheets that you have already completed, just to make sure that all of those calculations are correct. If you do find errors, then you should go ahead and complete a new income and rent calculation worksheet for the client. Or if the issue lies more with paying out the utility reimbursement, then go through and document each month where the payment that the client is entitled to and the payment that they actually received are different. You want to make sure that you have records of that so you know which months to be looking at. The next step would be to determine the difference between what the client has received and what they should have received during this time period. You want to make sure that you document this in the client's file, as well as the calculations that were used to determine this difference. So you do want to make sure you still have record of any income and rent calculation worksheets that were completed incorrectly, just so you can show that against the new one that does have the correct calculations and show why an additional payment is needed to the client. And then a consideration when you are going through, if there is anything that has determined to have an error, you need to make sure that if you are giving additional payments to clients, to make sure that they receive the full amount of rental assistance that they're entitled to. You need to ensure that the period of time that you are giving them the payment for is still during the current grant period. So for instance, if a client has a lease that started October 1st of 2021 and it goes through the end of September of this year, and the grant period is January 1st to December 31st, so calendar year 2022, you would not be able to correct any payments made to the client from 2021. So October 1st, 2021 up to December 31st, 2021, you would not be able to change any of the payments that you made to the client, even if they were incorrect. Anything starting from January 1st up until the present is still able to be corrected, since that would be the current grant period that you are in. And then the last step would be to, once you have that full amount determined, once you have the difference calculated, you could either make a payment to the utility company on behalf of the client, as long as you have that documented permission from them, or you could do the reimbursement payment directly to the client. Another question that we get, if the client's utility bills are less than what their utility allowance is, are they still entitled to receive the full utility allowance or utility reimbursement? Yes, the client is able to receive the full amount still. They will just benefit from their consumption efforts from that month. So going back to the example client that we discussed earlier, again, as a refresher, their utility allowance was determined to be $165. Their total rent contribution for the month is $153. And then they are entitled to a $12 utility reimbursement to make up the difference of $12 between the utility allowance and what they pay. Let's say for the month of September, their actual utility consumption was only $150. So the client would pay the $150 to the utility company, and then since their allocated payment would be $153, they would get to keep the extra $3. They are not required to pay that to the utility company or contribute that towards rent. That would just be extra money that they get to keep. They would also still be entitled to the $12 utility reimbursement from the program. So that could be paid directly to the utility company and go onto their account as a credit, or it could be given to the client directly. And then one last question that we get, we see a lot of times where a client doesn't have any income and the utility reimbursement that they're entitled to is not enough to cover their actual utility expenses. And we get asked, can I pay for their additional utility costs from program funds? So no, you are not able to pay for utility costs above the utility allowance with program funds. However, you are able to pay these with non-program funds and then count this towards match. So if this is something that you have a lot of clients struggling with, this is something that you are still able to help them out with. It just can't come from program funds. And then here at the end are some of the resources I had linked in the presentation. I would really recommend looking at the HUD notice. This has some more examples of calculating those utility allowances and utility reimbursements. If you scroll down, there are a lot of charts like this where it will walk you through and show you how the actual payments break down. So if you still have a little bit of trouble understanding how the utility reimbursement factors into this, I would recommend looking through this. And then I have just a few links to some IHCDA forums and some HUD TA sites. Okay, and that is all that I have on my presentation. And if anybody has any questions, we can open up the floor to questions now.
So one question I would have is, when you talk about the option of giving the money directly to the client or utility, we've always opted to do to the utility company. If you did it to the client, gave it to the client, what kind of documentation do you need? And are you really not recommending that, it's sounding like?
So we do strongly recommend that you pay it directly to the utility company, just so there's some consistency, since rent payments are made directly to the landlord. That is the option that we definitely recommend. If it is paid out to the client, then you don't have to have those 2 additional pieces of documentation. So you wouldn't need to have client consent, and you wouldn't have to show the amount paid each month. But again, we do strongly recommend that you pay it directly to the utility company.
Yeah, and I'm sure we will continue to do that. If we, for some whatever reason, decided client just absolutely needs it this month directly, there's no documentation needed. It's just noted in the case notes that it was given directly to the client? Or
Yeah, I would document it in the case notes, and then of course make sure that you have the receipt from the payment made to the client.
okay, so just a copy of the canceled check?
Mhm.
Okay, all right, thank you.
And we received a question in the chat from Katrina. She asked if we want to do a correction, how do we notate that for our claim? So Katrina, if you can give me a little bit more information on that question so I can make sure we answer it properly, if you don't mind.
Yeah, sure. I just meant, since it would be higher than our normal utility payment that we make for that client, would we just explain in the notes on the claim that we were doing it as a correction, or is there any other documentation it would need?
So as far as I guess I'm trying to find out, you're wanting to correct what exactly?
Sure. So
Sorry.
one of our past staff people didn't make those utility payments that she should have each month. So there's some correction, and we're still within the current grant period for several of our clients. So we could potentially pay a higher balance than normal for their utilities all at once, and it would just look out of place. So I just want to make sure we're doing it right.
Okay, that makes sense. Yeah, so I would just make notation that the full utility amount wasn't paid initially, and this is why X, Y, and Z. And then this is the new amount and the new correction. I would just make notes in each client file. I know there's a trend like where people like want specific guidelines and specific forms, but we don't have those forms because HUD really looks for things to be in the client file case by case basis. So I would just focus on updating that specific client file, if that helps.
Okay.
So there's on the claim form, you can just do it as normal as utility allowances and things like that. But as far as explaining for internal purposes what was going on and why is the payment being made out of place, I would just put it there. Okay.
Okay. Thank you.
Thanks.